Stock markets have plummeted since the announcement that the Fed will hike up 0.5% interest rates per time to combat the future foreseeable inflation rate. Because of this, the Dow Jones Industrial Average has gone down a whopping 1,164.52 points today. Hey everyone, welcome back to my channel. It's Nazar back from another video. Today, I'm going to be talking about the reasons why the Dow Jones has gone down and why the ICSIC has gone down, and what we can do to try and make the best of this, and also what are the reasons behind this bearish market. So before we begin, I want to say I'm not a financial advisor and you should always do your own due diligence and research before taking part in an investment scheme. Let's get into it. So, as you can see here on the 5-year timeline, at the time of COVID in March 20th, 2020, it was at an all-time low of 19,173.98. And this is the Dow Jones we're talking about. And right now, it's looking to be around 31,490.07 points. They have said that this is the second worst day since COVID-19, since the onset of COVID-19. So if we see on Feb 14, 2020, it's around this similar price point as it is now. So things aren't looking very great. Also on the ICSIC or Nasdaq Composite, it has gone down 566.37 points, that is 4.73%. And as we can see, if we go to the 5-year index, we can see that in 2020, it was even lower than this. But around Feb 14, the prices were around similar. So things are not looking great. Let's see why. So markets have plummeted over the past month as the Federal Reserve telegraphed that it would regularly hike interest rates by 0.5 percentage point for the foreseeable future to combat persistent inflation. On Wednesday, the Dow INDU shed more than 1,164 points, or 3.6%, its biggest loss since 2020. The broader market lost 4%, putting the S&P on the precipice of bear market territory. The Nasdaq Composite lost 4.73%, according to CNN Business. So now investors are actually asking for more. They're calling for a 3/4 point rate hike at the conclusion of the Fed's June meeting, despite Fed Chair Jerome Powell assuring that an increase that high just isn't on the table. It's not going to be there. And also, Bank of America analysts wrote in a note that they fear there will soon be a wage price spiral in the US because of risks that the Fed hikes too little. The current market reaction, they said, suggests that investors, quote unquote, I'm quoting them, according to CNN Business, see the Fed as moving too slowly on the inflation fight. A 75 basis point hike might have been feared, but it appears it wouldn't have been preferred. Nomura Securities has predicted that the central bank will hike the Fed funds rate by 0.75 point in June and July after the 0.5 point rise in May. Also, what we have to see is stock market news live update from Yahoo Finance. What is the other reason that we know that the markets have reacted so bearishly? The moves lower came as some weaker than expected earnings resulting from major retailers underscored the toll that inflation has been having on corporate profits. Target TGT on Wednesday cut its full-year operating income margin outlook as the input and transportation costs remain elevated and estimated it could see an additional $1 billion in transportation costs this year due to rising fuel prices. And this came after Walmart, the largest U.S. retailer, on Tuesday, reported weaker than expected quarterly earnings and slashed its profit outlook for the year, citing higher wages, fuel, and food costs. So, in conclusion, for Walmart and for Target, shares of both companies sank. dragging peers including Costco and Dollar General into the whirlpool and lower into the sympathy. So the S&P retail ETF dropped more than 8%, and the S&P 500's consumer staples and consumer discretionary sectors lagged. So I think what investors actually realized was the seemingly safe stocks, the seemingly anti-bear market stocks like Target, Walmart, they're not immune that their costs are rising. They can't pass their higher costs onto their consumers. And Walmart said yesterday their customers are coming in buying groceries, but they're not buying hard goods. They're not buying other products when they have a slightly higher margin or a slightly higher price point. So if you look at the consumer and recognize, yes, rates are up, but they're not going up at the same rate as inflation, and the highest cost increases as food and energy, that's funneling away spending that ordinarily would be spent at a more profitable side of Walmart and Target. That's just funneling away spending the ordinarily funds that would be spent on a more profitable side of Walmart and Target. Also, Robert Kiyosaki says that crashes are the best time to make money and get rich, and I wholly agree with him. This is a statement from Robert Kiyosaki that crashes are the best times to get rich. Here's why Robert Kiyosaki thinks Bitcoin's plunge is great news and how you can take advantage of it. So he tweeted last week, Bitcoin crashing, great news. I'm waiting for Bitcoin to crash to 20K. We'll then wait for test of bottom, which might be 17K. Once I know bottom is in, I back up the truck. Crashes are the best times to get rich. Kiyosaki also added that Bitcoin is the future of money and that its bottom may be even lower at $11,000. Now, for those of you who don't know who Robert Kiyosaki is, he's a multi-billionaire stock investor and entrepreneur, and he's also the author of a book called Rich Dad Poor Dad. It's a very good book. It teaches you the difference between millionaires and billionaires lifestyle and ordinary people's lifestyle, and I really like that book. So anyways, in today's market environment, it's not easy to be a contrarian investor, to be bullish when the entire market is bearish. But if you share Kiyosaki's view here, I feel like there are 3 things that we can do to capitalize on Bitcoin's potential rebound. Number 1, I feel like it's to buy Bitcoin directly. The first option is probably the most straightforward here. If you want to buy Bitcoin, just buy it. Buy Bitcoin. These days, many platforms allow individual investors to buy and sell crypto. Just be aware that some exchanges charge up to 4% in commission fees for each transaction. So be on the lookout for apps that charge low or even no commissions. This is what I have found works best for me. And while Bitcoin commands a full 5-figure price tag, there's no need to buy the whole coin. You don't have to buy all of it. Most exchanges allow you to start with as much money as you can and buy quarters and quarters of Bitcoin. You don't have to buy all of it. The second thing that we can do is invest in Bitcoin ETFs. So ETFs, or exchange traded funds, have risen in popularity in recent years. They trade on stock exchanges, so it's very convenient to buy and sell them just like a stock, just like any other run-of-the-mill stock. And now investors can use them to get a piece of this Bitcoin too. So for instance, for example, ProShares Bitcoin Strategy ETF, or its ticker symbol BITO, started trading on NYSE Arca in October 2021, marking the first US Bitcoin ETF on the market. The fund holds Bitcoin futures contracts that trade on the Chicago Mercantile Exchange and has an expense ratio of about 0.95%. And number 3 is Bitcoin stocks. When companies tie some of their growth to the crypto market, the shares can often move in tandem with the coins. So basically, have you ever seen the fuel market? The fuel market moves very similar with the economy. especially like heavily weighted oil indexes like the Russell 2000, they will move along with the graph. The movements are very similar. So in this way, first with Bitcoin stocks, we have Bitcoin miners. The computing power doesn't come cheap and energy cost can be pretty substantial. But if the price of Bitcoin happens to go up, miners such as Riot and blockchain and hot 8 mining will likely receive growing attention from investors. And this applies the same way as the fuel market. The Bitcoin mining and Bitcoin itself, they move very similar. They move in tandem together. They go up, one goes up, the other goes up. One goes down, the other also goes down. Because the mining and Bitcoin are obviously interconnected. And also then there are intermediates like Coinbase and PayPal. When more people buy and sell and use crypto, these platforms stand for a benefit. And these also move very similar to the mining and Bitcoin itself. And finally, there are companies that simply hold a lot of crypto on their balance sheets. For example, case in point, MicroStrategy MSTR, it's got a whopping market cap of 2.3 billion, yet its Bitcoin count reached 129,218 at the end of March, which is a stockpile worth around 3.8 billion. And I know you guys feel that I am not being sincere because I can see that 70 to 80% of you are not subscribed. And I didn't know this before, that you can see how much of your viewers are subscribed. So please subscribe. Also, here's your proof. Case in point, MSTR has a market cap of 2.3 billion and a stockpile worth around $3.8 billion. Also, I would like to share that the Fed could hike rates to 5% by the time it ends the current bout of tightening. Deutsche Bank's chief economist said that would be the highest level since 2006. So Fed futures trade see a 9% likelihood that the Federal Reserve will raise its main policy and the interest rate target by 3/4 of a point in June to between 1.5% and 1.75%, according to the CME Fed Watch tool. So in conclusion, this market will be heavily bearish, and many people say that this will be a summer of pain. But also, I strongly agree with Robert Kiyosaki's statement stating that crashes are the best time to go get rich. Thank you guys so much, and remember to subscribe, like, and share this video. Remember, buy the dip. Let's go!